I'm here with Clive Maguchu, Senior Strategist at State Street Global Advisors. Clive, welcome to the Inside Network's Income and Defensive Asset Symposium 2024.
Thank you for having me.
Now let's set the table with an easy one to start. What do you see as the salient market trends in the current environment, and how are they influencing your approach to building portfolios?
Yeah, so we're seeing a lot of growing uncertainty and a lot of macro risks out there. So particularly when you look at, the geopolitical landscape, you've got the elections that are happening, you've got conflict. And then from a macroeconomic perspective, you've got the high inflation and you've got slowing growth as well. And then on the market perspective, you also have the market concentration that we've had over the last couple of years. So all of those are really making it a very, very important consideration for building portfolios that are resilient in multiple scenarios. So we've been recommending that clients diversify their portfolios beyond equities by adding asset classes such as fixed income to have that more defensive nature in their portfolios.
And how are you positioning your portfolios defensively to protect against downside risks while still bringing in and capturing some of those growth opportunities?
In summary, within equities, we've really been focusing on the quality factor as a factor that can perform even in a downturn. And also looking at regional diversification away from the big US tech names that have been dominating market returns over the last 18 months or so. So that's regional allocations into countries such as Japan and India, as well as into other sectors such as healthcare. And beyond equities, we're looking at global infrastructure and small caps, as those can diversify our equity portfolios while still delivering reasonable growth expectations. And another one that we've been looking at has been gold, because that has very good downside protection and can perform really well in any environment.
Very good. Now, generating a strong and consistent level of income is a key objective for many advised clients. Where should they look for a good blend of income without excessive risk?
So we're very big advocates for a multi-asset approach to generating investment income. So that means looking beyond just dividends or rental income for that investment income. So that means allocating more to fixed income, particularly given that yields in fixed income are at their highest levels in over 10 years. So different segments of fixed income, that's government bonds, corporate bonds, cash, and some other higher yielding segments of fixed income, to blend those with global dividend paying equities and perhaps some property. And what you have in the end is a very well diversified income strategy that does generate some decent income as well.
Now at the event here, we're lucky enough to draw on the knowledge of some of the best investment thinkers in the country. What are the takeaways that you're hearing from them around client concerns in the current environment? Keeping in mind, we just touched on this in the session that you're a part of.
Yeah, the common theme really has been the big disconnect that their clients are seeing in terms of the news. So it's all doom and gloom, all the wars, inflation, cost of living, and so on. And then when they look at the portfolios, it's really that really strong performance we've seen, particularly from risk assets like international equities. So the main concern from advisors has really been, how do they look to de-risk their equity portfolios? And then if the rally continues, how are they going to explain that to their clients, given that disconnect we're seeing? The other main concern really has been around private credit. It's a relatively new area for the retail market. And so advisors are really concerned about how they get access to that really attractive return stream. So those are sort of the two main areas of concern that we've been talking to advisors about.
Brilliant. Clive Maguchu, thanks for joining us.
Yeah, thank you.